I know you are. You are, but isn't it dangerous to suggest that others put money where your mouth is, given what's happened to go from 60,000+ to where we are today? And you mentioned Munger and Buffett, by the way. Munger, who has called crypto rat poison in the past, said just this morning that crypto is, quote, rife with fraud and delusion of crypto itself. He said, quote, the country did not need a currency that was good for kidnappers. Carl Icahn the other day told me it's lawless like the Wild West. Those guys were pilloried, especially Munger and Buffett, by people like you when they made those initial statements. Doesn't this bear out that they're right?
No, I think there's two things here. First is, if we're going to talk about just pure performance, Shopify and DoorDash are down 75 to 90%, right? They're stocks, literally just tech stocks that are openly talked about on financial networks that are down more than Bitcoin. So if Bitcoin is so great, are we now going to argue that Shopify is not valuable, that it's over? No, of course not. So I think that that's just an argument that doesn't really have any legs. In terms of Charlie Munger, as I've said over and over and over again, they do not understand the technology. To confuse Bitcoin and crypto, one, is a false comparison. The second thing is that the US dollar is used more for money laundering or criminal activity than Bitcoin. The former CIA director came out with a study to show that, right? And so as you go through the arguments, I get it, right? People want to have the headline grabbing kind of anti-Bitcoin statements. They want to have the critiques. But as you continue to look at the technology, this is a decentralized peer-to-peer network that has a great track record of protecting purchasing power over long periods of time. And Bitcoiners are trying to usher back in timeless investing principles. Warren Buffett and Charlie Munger, buy great assets, hold them forever. That is a Bitcoin principle. Dollar cost average into great assets. That is a Bitcoin principle. And so I believe that if Warren Buffett and Charlie Munger were 25 to 35 years old today, they'd be Bitcoiners. The difference, though, is they didn't have the opportunity to allow for decentralized software-based money to come along to store their assets. Bitcoin has outperformed their investments over the last decade, and it has continued to during this period of undisciplined monetary and fiscal policy. And I believe that they will continue to hate on Bitcoin. They will continue to say things that show they don't understand it.
The problem is if you want to do, and you make the analogy to various stocks, you can do a fundamental analysis on a company's projected earning power over a set period of years, decide what the correct valuation is to pay for that future growth. You can't do any of that in crypto. You can't do any of that with Bitcoin. You can be a believer in blockchain technology and still think that crypto is a highly speculative asset based on next to nothing.
Well, again, I don't believe that to be true, right? So I would say two things. One is you can definitely do a fundamental analysis. Take hash rate as an example. Bitcoin is the most secure computing network in the world. Hash rate's at an all-time high. Price is down 75% and hash rate keeps climbing. There's a dislocation between price and fundamentals. 67% of the Bitcoin that is in circulation right now today has not moved in 12 months. The price of Bitcoin fell 75% and 67% of the Bitcoin didn't move. We are watching the greatest battle of 2022, where it is Bitcoiners and the hodlers versus the macro environment. And I'm willing to bet, and I am betting, that the Bitcoiners will outlast the macro tightening financial conditions. And ultimately, the Federal Reserve and other central banks around the world will have to return to loose monetary and fiscal policy. And what we will see is that the hodlers will still be hodling. They will still be Bitcoining. And ultimately, the people who do not understand the technology will continue to hate on it. But Bitcoin doesn't care. It produces block after block after block of transactions. And it is the only monetary policy in the world over the last 3 years that did not change. We have central banks.
I reference, forgive me for interrupting you, but there's a report, and I referenced this at the top of the segment here, about another crypto-related entity that may be in trouble. Wall Street Journal reporting that BlockFi is preparing for a potential bankruptcy. I watched a clip before we did this interview in which you called it a, quote, rocket ship. Get on board, you said. I am bullish, bullish, bullish. I mean, isn't that part of the problem? Don't you have any regrets whatsoever for making statements like that and perhaps putting people who are less experienced than you into some of these assets?
Yeah, I mean, Scott, you can take anything out of context. I've literally recorded 1,200 podcast episodes, right? You can go back and find all kinds of crazy stuff. But the context you're talking about was I was an investor in the company in a private placement round where accredited investors evaluated a business and put capital in. If something happens to a company that I'm an investor in, then we lose money. That is called capitalism. It's called taking risk. And the fact that we now want to take that and somehow spin it or pull it out of context, I think is inappropriate. Instead, what I think we should be talking about is the fact that we have businesses in the United States who now are suffering at the hands of what appears to be a potential fraud. Again, we will get those details. But now, as those businesses are suffering, we have funds, we have different centralized infrastructure companies. This all happened in the United States, which supposedly we were yelling and screaming about people who are running around trying to avoid regulation. We need to get our act together in the United States because this technology is not going away. This is going to be one of the...
This is not about pointing fingers. This is not about that. I think it's mostly about understanding the power that you have with as many Twitter followers as you have, with the captivating voice and articulate way that you describe this asset in an environment that grew to be highly speculative. You don't think that you have the power to influence people to get into certain areas of the market that maybe they shouldn't be in? You don't think that's a fair question to ask?
You can ask whatever questions you want. Scott, CNBC is the most powerful financial network in the world, and people critique CNBC for pumping Bitcoin. I don't see anyone on CNBC apologizing for that. You talk about an asset. Just because somebody criticizes you for something doesn't mean they're right. And so if you're going to argue that CNBC is not as powerful as me with a single Twitter account, that's insane. And so ultimately, there's no difference between any of the media platforms, right? I have a media platform. It happens to be under my name. You have a media platform. There's plenty of people. You've been talking about Bitcoin all day. At the end of the day, people will critique the assets. But the Bitcoiner mantra, dollar cost average, hold a great asset forever. Those are timeless investing principles that Warren Buffett, Charlie Munger, and many other investors go ahead and look at. And just because the price goes down, again, there are other companies and stocks and assets that go up and down in price. This is how markets work. And so, no, I don't think that CNBC should be criticized for talking about an asset. You have people who come on who like it. You have people who come on that don't like it. I have people who talk about it positively. I have people who talk about it negatively. That is where the conversation lies. And rather than simply going around and trying to yell and scream at each other in the bad times, what I think we should do is we should encourage more conversation. We should have conversations like this where people who like the asset, who don't like the asset, come together, they discuss it, and then ultimately the free market will decide what happens. I have a view. I'm expressing that in the market, and we'll see what happens.
Okay. It is undeniable that confidence in this asset class has taken a tremendous hit.
I don't agree with that. I don't agree with that.
You don't think confidence has taken a hit? Really? 67%
of Bitcoin. Don't listen to anything anyone says. 67% of Bitcoin in circulation has not moved. It's an all-time high. It's never been higher. Bitcoiners are holding. They are not selling this asset. That's what the mainstream media does not understand. Bitcoiners do not care about the price. And you can see it in the data. It's all on chain. Anyone in the world can evaluate it. 67%.
They probably bought it higher and they're not selling it, so they're holding on, in your words, for dear life because they're believers still. They don't want to believe that their investment is not coming back. I mean,
that's not true either because wallet addresses on chain with 0.1 and 0.01 Bitcoin. This is literally hundreds to a couple $1,000s. The number of wallet addresses on chain continues to hit all-time highs. The people, not institutions, not nation states, the people continue to buy Bitcoin. It is available for anyone in the world to audit on-chain data. That is the beauty of Bitcoin. This is not up for opinion. It's not up for debate. There is hard data that you can go on. You can look at yourself. 67% of Bitcoin is not being sold, and the number of wallets on chain that continue to dollar cost average into this asset is going up. It's hitting all-time highs.
You don't think that institutions are going to more closely scrutinize the investments that they make in this space after the FTX blow up? You really don't believe that? You don't think the average investor is going to sit at home and think maybe crypto isn't what I thought it was? I'm afraid of losing all my money despite what Anthony Pompliano suggests I might want to do?
Well, Scott, see, you're conflating two things. You're conflating the centralized equity investments with Bitcoin, which is a decentralized currency.
No, I'm talking about the confidence in the space itself. I'm talking about the confidence which has clearly taken a hit. How couldn't it? When an individual like Sam Bankman-Fried has his fortune literally blow up overnight, when one of the largest crypto exchanges in the world blows up overnight and fortunes are lost, small fortunes by people who can't afford to lose it are lost, you don't think that there's going to be more scrutiny on the kinds of investments that are made both by individuals and institutions in the future? And you don't think it's relevant to discuss what restores that confidence in what is still a fledgling asset class with next to no regulations whatsoever?
Well, I never said that there wasn't going to be more scrutiny. I absolutely believe that. I've tweeted that publicly. The second thing is it is regulated. You have to stop saying that. This industry is regulated in the United States. If you run a centralized exchange, you have to go get approvals from regulators. The regulators are doing the best job that they possibly can to continue to have oversight here. Saying it's unregulated in the United States is just false. That is inaccurate information. There are places in the world where it is not as regulated as in the United States. The actors in the United States of America want to do three things. They want to build great companies that solve problems for customers. They want to be regulated in a way where they feel like they can operate their business and also adhere to whatever rules the regulators believe are accurate. And the third thing that they want to do is that they want to create economic opportunities. That is what capitalism is about. That is what this country was built on. It is what the American dream is all about. And if there is
obviously not regulated enough. Even the biggest players in the business suggest that it needs more regulation.
Bernie Madoff was regulated. Of course, if bad people are going to do bad things, duh, of course. But the regulations only work if people are telling the truth. If the auditors go in and they audit, and in this case, there's accusations that somebody created a backdoor to change the numbers so that the auditors couldn't tell. Ultimately, bad people do bad things, but that doesn't mean it's not regulated. Right? That's not what that means. And the big players aren't saying bring on more regulation. What they're saying instead is, hey, we understand where the rules are. We need to get this right. In the United States of America, we cannot create rules that push people outside the U.S. We have to do this here in the U.S. The U.S. has the best capital market system in the world, and it is the shining light on the hill. If we want to continue to do that, especially in this industry, we have to have rules that make sense. We have to do it so that people can actually operate their businesses within it. And what you will find is there is great appetite in the operators and entrepreneurs to work with regulators to create that environment. And I think actually regulators and the entrepreneurs want that together. They're working as hard as they can on it. But to say that there is not regulation in the United States is just flat out false.
We're going to leave it there. Anthony, I appreciate your time.